Let's go to Mike in Melbourne. Mike, you're on News 96.5. Go ahead.
Hi, good morning. Thank
Hey.
you. What I'm trying to do is when I pass the properties on to my kids, that the value, the fair market value of that property rebases to the time of passing, not to what it is.
Gotcha. Okay. So, Mike, that makes some sense. So, Mike, what you're talking about is a good provision within the Internal Revenue Code called the step-up basis. The step-up basis says that when you own an asset, whether it's a piece of property or a corporation that owns assets or the painting on your wall or stocks in a company, when you own assets and your children inherit those assets upon your death, their basis for capital gains tax purposes is the value at the date of your death. Okay? So if you bought a house back in the good old days for $50,000 and you pass away and your children inherit that house from you through a traditional will, through a living trust, through an enhanced life estate deed, their basis for capital gains purposes will be the value at the date of your death. They sell it for $200,000. They're going to pay absolutely no capital gains taxes. Mike, you can see that the step-up basis is a good thing. It is important that you get it on any asset that has a low basis and a high value. Mike, these assets are owned by your corporation. As long as the kids don't get any stock in that corporation until you've passed away, they will get the stepped-up basis on the assets within that corporation. Now, Mike, I hope I answered the question for you. It is really quite all I can say is this, Mike, if you want to get a step-up basis on your corporation stock, you cannot give them that stock during your lifetime. Stated another way, they have to inherit that stock upon your death. Mike, if you want more information, you're welcome to call me at my office next week at 407-423-5561.